If you start looking into burial insurance, I'm guessing you've already run into a problem. Every website calls it something different. Final expense insurance, pre-need insurance, simplified whole life, guaranteed acceptance. And somehow, they're all supposed to solve the same problem, making sure your family isn't stuck with a 5, 10, or even $15,000 funeral bill while they're grieving. In the next few minutes, I'm going to cut through that. What burial insurance actually is, how it's different from the other names you've seen, what really drives the price, and, just as important, when it's not the right move. No pressure, no confusing sales language, just the plain English version. Hi, I'm Paul Helbling, and I'm a licensed insurance agent. On this channel, I explain insurance and family protection topics in plain English without the pressure or confusing sales language people often run into when they start researching these products. If you're shopping for coverage for yourself or you're an adult child trying to help a parent sort through the options, this video is built for you. We're going to look at what burial insurance actually does, how you qualify, what affects the price, and several mistakes to avoid. I won't be naming specific companies or quoting exact rates because those depend on your age, health, what state you live in, and the carrier. Anyone who gives you a firm price before asking you a single question is skipping steps that matter. Let's start with the plain definition. Burial insurance is a small, whole life insurance policy. Whole life means it's permanent. It doesn't expire after a set number of years the way term policies does, as long as you keep paying the premium. Small means the death benefit is usually modest, often somewhere in the low five figures, sized to cover final expenses rather than replace someone's income. What it's actually meant to pay for: funeral and burial or cremation costs, outstanding medical bills, and any small debts left behind. Funeral costs in the U.S. are frequently cited in the $10,000 to $12,000 range, and that number tends to catch people off guard, which is exactly why this product exists. One more feature worth knowing: most of these policies build a small amount of cash value over time. However, that's not an investment feature. Don't buy this expecting growth. Think of it as a modest built-in cushion, not a savings plan. Now, here's where almost everyone gets tripped up. Not the product itself, but the name on it. Burial insurance and final expense insurance are, in almost every case, the exact same product. Different companies and agents just market it under different names. If you see either term, you're looking at the same type of policy: a small, simplified whole life plan you buy directly through a licensed agent where you name your own beneficiary and they receive the cash value directly with no requirement to spend it through any particular funeral home. Pre-need funeral insurance is a different animal. That's a policy or contract you typically buy through a funeral home, tied to specific services at that specific home. It can lock in today's prices for services you choose in advance, but it's usually less flexible, and if you move or that funeral home closes, things can get complicated. And then there's regular whole life insurance. Same underlying concept as burial insurance, just usually issued in larger amounts with more underwriting involved. Burial insurance is really a smaller, simplified slice of that same whole life category, built specifically for this purpose. Once you know what you're actually buying, the next question is whether you can even qualify for it, and that's not a one-size-fits-all answer either. Burial insurance policies generally fall into two tiers. Simplified issue means you answer a handful of health questions, no medical exam, and your answers determine whether you qualify and what you pay. If you're in reasonably good health, this tier is usually the better value. Guaranteed issue means there are no health questions at all. You're approved regardless of your health history, and that sounds like the obvious choice, but it comes with a trade-off. Most guaranteed issue policies include what's called a graded death benefit, meaning there's a waiting period, commonly 2 to 3 years, though this varies by carrier, before the full death benefit pays out for a death from natural causes. During that window, if the policyholder passes away, the beneficiary typically gets the premiums paid back plus some interest, not the full face amount. Accidental death is usually covered in full, even during that window, but natural cause deaths are the ones typically affected. Neither tier is automatically the right one. It depends on your health and how soon coverage needs to be at full strength, something we'll come back to. So qualifying is only half the picture. The other half is price. And this is where I want to be careful because the honest answer is it depends. I'm not going to quote you a number in this video because any number I gave you would probably be wrong for your situation. But here's what actually moves the price. Your age when you buy the policy, your health class based on those simplified issue questions, whether you use tobacco, the amount of coverage you choose, and the state you live in. Here's the genuinely good news, and it's not a sales line. Once you're approved and your policy is issued, the premium is locked in. It does not go up as you age, and the death benefit does not shrink over time as long as premiums are paid. That's a real structural benefit of whole life insurance, not a promotional gimmick. So now you know what it is, how you qualify, and what drives the price. The real question is, does it actually make sense for you? Let's walk through that. Linda is 68, retired, living on a fixed income. She has some savings, but nothing specifically set aside for final expenses, and she doesn't want her kids covering a funeral bill on top of everything else. For someone in Linda's position, a burial insurance policy sized to cover those costs is often a reasonable, low-risk way to close that specific gap. Now we'll picture someone else. Frank already has a life insurance policy in place that's large enough to cover final expenses several times over. Or he's deliberately set aside cash specifically earmarked for this purpose. For Frank, an additional burial insurance policy is probably redundant. It's not that the product is bad, it's that he's already solved the problem it's designed to solve. That's the honest test. Does this close a real, specific gap for you, or are you already covered? If you're not sure which one you are, that's exactly the kind of question worth actually sitting down and answering, not guessing at. Before we wrap up, I want to cover the mistakes I see most often when people shop for this on their own, because these are avoidable. First, chasing the lowest advertised price without checking which tier it is. A guaranteed issue quote will often look cheaper on the surface, but if you would have qualified for simplified issue, you may be paying more for a policy with a graded waiting period you didn't need. Second, stacking several small policies from different companies instead of one right-size policy. It happens more than you'd think, and it usually means paying more in combined fees for the same total coverage. Third, not naming a specific, up-to-date beneficiary or forgetting to update your beneficiary after a major life change. This is a real simple detail that causes real delays for families at the worst possible time. Fourth, not answering health questions honestly on a simplified issue application. If something is discovered to be misrepresented later, it can jeopardize the claim. If you're not sure how to answer a question, ask before you sign. Don't guess. So here's the main thing I want you to remember. Burial insurance is a relatively simple product. It's a small permanent life insurance policy designed to help cover final expenses so the people you care about aren't left trying to solve that financial problem while they're grieving. Most of the confusion comes from the different marketing names, the qualifying tiers, and the fine print, not from the basic purpose of the policy itself. If this video made the subject a little clearer, take a second to hit the like button. That helps YouTube show this to other people trying to make the same decision. And consider subscribing to the channel for more straightforward explanations of insurance, family protection, and the financial decisions that affect the people you leave behind. If you think you might have a final expense gap, or you're just not sure whether you do, you can also schedule a free, no obligation conversation with me. I'll ask a few questions, walk you through the options, and tell you honestly whether burial insurance fits your situation. The scheduling link is in the description and pinned comment below. Thank you for watching. I'm Paul Helbling, and I'll see you in the next video.